just heard, big news for the real estate market. The Federal Reserve just cut its benchmark interest rate by a large half point, which is a major shift. We're going to talk about what this really means for you. So joining us in the studio again, we have Brian Coester, CEO of Real Estate Connection. Thank you for being here once again.
Thank you for having me.
Yeah, so tell us what the Federal Reserve, what does this mean, this rate cut? What does this mean for buyers or potential sellers?
So ultimately, the Federal Reserve controls the monetary policy. So think about it, in higher rates equal higher cost of borrowing, higher monetary cost, lower rates equal lower cost of buying, lower monetary costs, right? So what they've been trying to do with higher rates is curb inflation. Inflation's been an all-time high. They have a target rate of 2%, so it's been significantly higher if you look at prices just across the board. The mortgage market has also been affected. So they've been steadily increasing rates since about March 2020 to help curtail inflation. They think they've done that. Now it's time to kind of speed things up, so they're lowering rates, which will directly affect the mortgage market.
Yeah, and they just showed that one graphic there. What does that mean? So you saw rates kind of spike.
Yeah, so they've been steadily increasing rates over the last 4 years to help curb inflation. That has directly affected the mortgage interest rates. So mortgage interest rates have been coming off historic lows. Now they were higher, 6-7%, which made it made the cost of borrowing money much higher than it's been. Now they're starting to lower rates, so you're going to see rates start to come down.
And could you provide some insight on how this could influence the housing market, short term?
Well, ultimately, 80% of homeowners currently have a mortgage interest rate of less than 4%, and that was because of some of the COVID relief programs that were put in place years and years and years ago. So sellers have really no incentive to move unless rates come down. So by lowering rates, you're going to incentivize sellers to move who have been sitting on historically low rates, and now you're going to start to see some mortgage market and some activity in the marketplace.
Okay, so let's talk.